What a year it's been, and it's only July. I'm Fraser Lack from Biggin, and in conversation today, I'll be talking what we're seeing on the street, buyer activity, the rental market, movement in values, and 5 real estate trends which will emerge from COVID-19. The media is populating varying predictions on the future for real estate, but only time will tell. The big question mark against the Melbourne market in the next 1 to 2 years is by having a higher risk profile relative to other markets due to the large exposure to overseas migration, as well as a downturn in foreign students, whilst already featuring stretched housing affordability and rental yields that are likely to reduce further on the back of rising vacancy rates. The Melbourne market has been the most exposed to demand from the migration. Over 2018 to 19, Melbourne had the highest influx, accounting for 38.2% of the total migration to Australia. Rental prices have plummeted nationwide, with unit rentals experiencing their biggest price drop in over 15 years. According to new figures released by Domain, show a historic fall of 3.2% in rental prices over the June quarter, and as of June 30, Melbourne's vacancy rate for rental properties reached 3%, which is more than a 30% increase since June of 2019. However, as less stock enters the market, more rental properties are being filled. So, where are we at now? Buyer demand, particularly from first home buyers and occupiers, remains elevated. New data shows us that buyers never left. Realestate.com.au video inspections have more than doubled, and searches in the buy side are up 27% year on year. They're out looking to take advantage of record low interest rates, and some are out to hunt down great value. The real issue is listings, which have been slow to return, and in this inequilibrium between demand and supply has seen prices hold up relatively well when compared to the broader economy. June marked the third consecutive month of value falls, down 2.3% from the previous quarter when the market hit a record high. However, this is the first interruption in the high annual growth rates, with the 12-month change in values still remaining in positive double-digit territory across Melbourne, sitting at 10.2% to date. Great properties are still selling well, and although we're experiencing an overall softening, there are markets within markets. The level of sales activity, listing and clearance rates fell in April. However, we saw a noticeable upswing as restrictions eased and confidence lifted. The second lockdown will stall this momentum temporarily. Consumers are bored, restless, hyperactive, and this is an opportunity. Never before have we had people working and living from home for an extended period of months. This has led many people to become dissatisfied with their current residence, to set out on a bold vision for a new way to live. Regardless of restrictions and negative media, we've made some incredible sales results. In June, we negotiated the sale of numerous properties, all very unique in character, accommodation, target market and price point. And in each case, it hasn't been easy by any measure, but we've navigated through. We've made small 1% changes for the better. Real estate was previously a very archaic structure and method, and if there's any blessing from this, it's that we're more efficient, skilled and driven. As restrictions ease, there's a lot we won't be bringing back. However, here's 5 trends that I believe are here to stay. Firstly, Plan A, properties to start out as an off-market. This is a toe in the water testing period to get some quality buyer feedback, positive, negatives and price. If the home doesn't sell in the first 7 days, it's then converted to a public campaign, Plan B. 2, more properties with realistic sellers are transacting quickly after being listed. Many vendors are more comfortable to take that early offer now rather than a hope and see approach. It's not about how long the property has been on the market, but how long the buyer has been in the market that counts. 3, more offers are being made subject to finance at an average of 10 to 14 days for approvals. In an environment where auctions were dominating, as now we trend through private sale, this is becoming standard. 4, many vendors are becoming more focused on the settlement terms over or equal to price. Dependent upon personal situation, we're seeing anywhere from 30 days settlement to 5 months, giving flexibility to either party. And lastly, private inspections only. This gives buyers more time to inspect in detail, but also making it harder for buyers to determine other interest in the property. Also, notable mentions, already seeing working from home influence design adjustments, including focus on dedicated home offices, a studio above garage, gyms and upsizing. We're also likely to see investment by overseas buyers who are seeking a more stable economy and safer environment, whilst also seeking great value through low currency exchange. In the sales and leasing space, there is no one-size-fits approach. It's tailored and designed to suit the property. In a fast-moving environment, myself and the team are equipped to move, shapeshift, and give you the straight, honest truth. If you have been thinking to sell or lease out your property in the next 18 months and want to know what is the new value now, get in contact with myself or David from the team at Biggin & Scott. We're always free for a FaceTime, chat or virtual appraisal. My name is Fraser Lack and I appreciate your attention.